Hi, it's Friday, December 5th. I'm Mike Stanton. This is the BAM Weekly Muni Market Update. I'm joined by Brian Babler here from BAM's Capital Markets Desk. Brian and I are both out here in San Francisco at BAM's West Coast headquarters. We're entertaining some folks from the market here. Been a great year for the state of California. BAM has now insured $30 billion for California issuers since our inception back in 2012. So we're really looking forward to celebrating with all the people who help finance essential infrastructure out here on the West Coast. Brian, so thanks for joining us. Let's talk about this week. The market really wasted no time getting back into the swing after the Thanksgiving holiday.
Thanks, Mike. Yeah, there was no Thanksgiving hangover. We got right back to business, and the market saw about a little over 16 billion price in the new issue market, and that was amidst a fairly volatile week. Munis outperformed a little bit, but there was definitely a little bit of a weaker undertone overall in the rates markets. We saw treasuries back up while steepening. The long end backed up a little more than the front end, but interest rates out in 30 years were off almost 10 basis points, around a 475 week over week, as we're recording this video, and the 10 years at basically a 410, down about 8.5 basis points. That's on the heels of a couple of the last economic numbers on the data front before the FOMC meeting, as it relates to the labor market.
And Brian, that volatility it would probably make a lot of sense, just given the fact that we have seen such an interruption in data due to the government shutdown. There was no November employment report. We would have expected that this morning, December 5th. It's now not coming till December 16th after next week's FOMC meeting. We did get a couple of private sector reads on the labor market, but that sowed some confusion themselves, right? What did they show?
Yeah, a little bit of two sides. We did get ADP earlier in the week that had a reduction in jobs, but then this morning the initial claims number was lower than it's been in quite a while. So a little bit of mixed signals and a little bit of a uh, hard data point to for the FOMC to put on the labor market heading into next week's meeting. So the market is still pricing in a 90% chance of a 25 basis point cut, and then more cuts beyond that. But it's certainly enough to kind of spook the markets a little bit and generate a little bit of a sell off, at least on the Treasury side. And again, longer rates were hit harder than the front end. But overall, munis outperformed that, basically flat through 5 years, maybe 5 to 8 years, and then 2 to 4 basis points higher in yield week over week from 10 to 30 years. But there was definitely a noticeable tone change where serials on new issue deals did well, and the long end was a little bit of a struggle to get done. So whether it took some structuring adjustments, some yield adjustments, or some underwritten balances, the longer end of the new issue calendar was definitely a little bit harder than the front end.
And certainly on the demand side, we saw another second week of about $700 million of inflows to muni mutual funds. Seems like the demand is still consistent there, but there's just been an awful lot of supply this year.
Yeah, it's we keep topping the record, and the real question is what next year looks like, and lots of estimates are starting to roll in flat to slightly higher for 2026 supply. So the market is, as you said, continuing to see inflows. What that looks like, whether that's mostly ETFs versus funds, and certainly the continued demand on the SMA side seems to be a consistent theme. But still solid fundamentals, solid demand for the product, and overall a very healthy market as we close out the year.
And one data point to think about for next year is that we have not seen a lot of refunding activity in these last two record years, a big departure from previous record cycles in the muni bond market. There's a lot of these forecasts for next year expecting another record year are starting to see an uptick in refunding activity. And by its nature, that activity is back in the 10 to 20 year maturity zone. So that, could be good to match up with the typical demand from the SMA buyers. So that could help the market even more.
Yeah, that's right.
So looking ahead just real quickly at the BAM insured calendar, $530 million of BAM insured new issues this week. Any stand out to you?
Yeah, it was a very active week, mostly on the negotiated side. The competitive market was relatively quiet, but we're still active on the competitive side. But on the negotiated market, we had a couple of public university student housing transactions for Akron University as well as Ole Miss. Those were priced by RBC and Raymond James, respectively. In addition, we'll stick with the higher ed space. Colorado State University system was priced by Morgan Stanley. BAM was used on one of the series there that was AA3 underlying rating, and then a smattering of call it $20 to $40 million deals, which all tallied up to a pretty healthy supply number for BAM insured bonds, as you mentioned, over 500 million.
And looking into next week, another higher education transaction on the calendar. What else is out there?
Next week, next week's supply will dip down a little bit. Again, the FOMC is scheduled to meet, so it seems the question will be right now. It's a little over 10 billion that's scheduled to price, but we'll see if any other deals kind of pop in. If the tone is strong enough and demand is there, that number could grow a little bit. But for BAM's purposes, one of the deals that we'd like to highlight is another student housing transaction scheduled to be priced by Raymond James, and that's for Middle Tennessee State University.
And that's going to be priced by Raymond James. Also on the Raymond James calendar, $67 million for the Arkansas City Schools in Kansas. So broad representation from some states we don't always see new issues in the market from. Thanks again for your time, Brian. Have a great weekend, and we'll talk to you soon.
You too. Thanks, Mike.